You laid out one heck of an investment case there. So where does VettaFi come in? What does the ROBO Global Index offer? And how do investors get involved here?
Yeah, so I help manage and lead the research and strategy for the ROBO, Robotics and Automation Index, and Think Artificial Intelligence Index. We joined VettaFi last year. We were acquired. It's been awesome. So ROBO was founded in 2013. It gives like picks and shovels, manufacturing, logistics automation, but also companies that are involved in like actuation. That's like the control systems, the sensors. And I mentioned that flywheel of like, how AI will help robots and vice versa. Well, a lot of that comes in the sensors and computer vision and all these kind of like underlying technologies. And so think of Robo as like automation in the real world, physical world automation, and Think being more automation across like business services and consumer and, companies that are involved in like semiconductor and networking. So it's an evolving body. AI is getting access to the real world through communications and sensors and computer vision. And you have to store that data, you have to analyze that data and communicate and explain that. As I mentioned, the government example earlier, that's one of the big things they have to do is explain it and observe it. And so we've been increasing, we're an active, not active, we're like a smart fundamental. We have a scoring process that, basically, we look at where AI is going, where the world's going, where robotics are going, and we make sure we have kind of allocation.
Has NVIDIA taken up too much oxygen in this space for the investor to actually be informed?
Well, yes. I mean, they're right now. They are kind of the pole position. They recently got rebalanced in that. I think it was XLK is like 20%. So it's very much overheld right now. I think people are discounting. I think people are like on one hand still underestimating the impact and investment that's in the broader AI ecosystem and all the other tangents like communications and cybersecurity that exist. But on the other hand, they're discounting maybe like the competition NVIDIA might face and other form factors of AI. I mean, one of the tangents that happens is that these LLMs get so lightweight they can operate on your device. So like sub-billion parameter versus like these 70 billion parameters. And I know that's a little technical, but just think like really small things that can run on your device that can handle a lot of tasks. It doesn't need to go to Microsoft, OpenAI, and some of these things. So we might see a world where there's actually less demand for that. Now, if you're controlling autonomous vehicles and all these things, there needs to be a centralized cloud. There's still going to be some training and improving of models, but that's a shift towards like real-world deployment and inference. But there is a feedback loop of those real-world applications to training. That's not going to stop. So there's still going to be demand for that, but we expect like a more diversified, winning basket. And just kind of diving into that point, like earnings growth, like the Think Index had 12.7% sales growth this quarter and 66% year-over-year EPS growth on a weighted average basis. And to be clear, we only have like a 3%, sub 3% allocation to NVIDIA. So this is driven by most other companies. And next year we're expecting 28% EPS and 17% sales growth, and 94% of the companies to be profitable. And this is based on FactSet numbers, weighted average basis. But point being, like this is a fast-growing sector, and it's governments are investing into this, major corporations are investing, and we're increasingly going to be seeing more like AI to consumer applications and services appearing. So you asked earlier, like, are we early? We're still very early. The real world impact is barely being felt, but I think people are starting to kind of get a feeling that something's happening.